Okay, quick Friday morning radar update. Risk markets moving again today, 250, small caps through highs, kind of range bound on the FTSE, punch higher on the DAX, above the opening range. So we've got 3 above the opening range, 1 sinking back in. Let's just quickly have a look. You know, we got some strong moves in the metals yesterday. A little bit of back and fill might be pretty normal, but yeah, good moves. Not sure about the gold stocks. You know, they've had a pretty good move higher on the actual gold price. I'd be waiting for a base or consolidation, or at least a first pullback on that, I think. Not seeing that many gold stocks, but you know, the metal stocks were all over the charts yesterday. Let's quickly just have a quick look what's happening in a couple of other markets from yesterday. Pound dollar is up near that sort of breakout level. Could be basing. And I'm going to jump straight into the volume leaders. I'll quickly look at the large caps. It's 10.52. We should have traded 32% to be on average volume. There's a few on volume today. We're into a long weekend, so I'll just buzz through these large caps quickly. See what's of interest for me in here. CTH continues. We saw all the house builders on Wednesday, was it? As well. They didn't have a great day yesterday, by the looks of it, but no, they didn't. They all hit the screens, and then they all died the day after, by the looks of that. Tune, just a kind of pullback, high in the sky. Rare view for us, but it just continues, doesn't it? CCC. It's just really sloth-like, this one. It's a bit like, can't remember what the other one's called now. GYS, obviously, I've taken profits on that one. Into the small caps, what did I say? 32. Just got to rearrange the screens a bit. See what's on volume in here today. This one's ticked down in the forward numbers, not that much of interest for me there. Michelmersh tick up in the forward, kind of lower high in the forward numbers as well if you look. Only in the pre-tax though. No forward on that one. This one's a tick down in the forward numbers, so nothing to see there. Same with that. That one's actually got a 0 in the forward numbers. I have no clue. Tick down, lose less. It's got a 0 as well. Got no forward numbers. This one's a lose slightly less. It's been going for some time though. The start of the journey, it would have been trading towards a totally different set of numbers. That's okay. It is what it is, you know. Return to growth on that one. No forward numbers. Big tick up in the forward numbers on this one. It's wide and loose at the moment. If it tightens up, it might be interesting. South 32. Left the station in style, didn't it? That one, we had it on the screens, didn't we, the other day? This day here, remember that? Close above. And this one as well is I don't know if it still is, I'll punch it in, but it just flew out the gates, didn't it, this one? It's right up there in my list still. It's obviously not a sector I'm that into, but I'm not going to argue with it. SLP. So, you know, high five to those in SLP. Extremely normal action. If this kind of action gives you the heebie-jeebies, you know, it's a 20% pullback, maybe a bit more off the highs. If that gives you the knot in the stomach, it's either because you're trading too big, you're looking at too close to the chart and missing how stocks trade, or you're riding a huge winner. You know, that will give it as well. You know, the big winner, you know, fantastic. There's nothing wrong with that. But the other two need keeping in check. You know, I'm on the soapbox again. You know the daily updates. What, you know, you go, oh, we're up. How much today? We're down. Whatever. You know, daily sort of updates on these things are pretty meaningless. This is what the monthly's doing. You know, that is where your mind should be, and this is what the weekly's doing. Just normal action. It's actually up on volume. It's a volume stick on the weekly, and at some point they all roll over, but you know, the best ones can go a long way before they do. But try not to get sucked in. In fact, that's my tip for the weekend. Do a monthly health check. Do not look at dailies or anything else. Just go through all your stocks on a monthly chart and just have a look at them and see what they're doing. Study the volume. The monthly volume is more important than the daily volume. The weekly volume, you know, that might be interesting as well. Then, you know, and do it in the history of the stock as well, because every time it comes into a normal area, you will get a little bit of a knot in the stomach. You've got to keep grinding the trends out in your account, and the longer you do it, the less it will affect you. And I'm not immune. You know, JLP's coming to the base again, and you know, I have to sit through a big dominating position in my account. I'll just show that. My portfolio, everything seemed to spike on the same day, putting a really high tide line in my portfolio, and then this one being one of the top four, having a big weighting on my account, coming in to an extremely normal area. It's actually on pretty good volume today. Extremely normal area where you expect it to come into, but it's still, you know, it has a big effect on the portfolio is what I'm trying to say. So you have to be immune to these things. Quick look at the markets again. You know, big punch higher, back and fill, normal action, small caps. We'll go through the big market, the big charts, the big markets, and I put these on weeklies. And you know, say it again. We was talking about it last night. The noise out there, and everything seems to be like, you know, scared trading. You know, you listen to a blog, it's all fear factor stuff. I mean, people love that, don't they? They pump out their stories and the fear and everything. At the end of the day, you know, these markets are just doing. If you're new to the markets, this will be your first grind because the market's been fantastic. But this is pretty normal. It's very normal. Look at these markets here. Go back. These markets are right near highs. At some point, you know, they roll over, but this is where the common consensus was that they should roll over, and it's done that since. So you never know what. And then the reply to this will be, yeah, but it's done that now, so it's bound to roll over now. Nobody knows. Nobody knows. You've just got to trade day to day, good risk management. You know, if you want to capture the best market, you've got to be blinkers on and just keep grinding out the right hand edge, and that's where the returns are found. That's the 250 market. It's not even blinked yet. This is the small caps, and we came into this. We came out of Brexit, and my view was, you know, the UK's just traded horribly since 2015, and you know, we're at the screens every day, and there's been some good market environments, and then it got choppy again, and it was a lot of chop, and it's easy to sort of micromanage your way into the trading tighter, smaller, shorter time frames, you know, to deal with the chop. Everyone who makes that shift, thinking the markets are now different, you know, they miss this. There's no way not to miss it. You know, if you change your you know what, you know, you jump time frames onto a shorter time frame, you miss the big move. There is no way you can sort of rectify that. You have to stay true to what makes the big money when the market's in the best environment, and that's why we just grind it out at the right hand edge. This is the small caps, FTSE small caps. You know, this is what it's done. It was so bearish and so everyone was so negative, and the same people are still negative now, and just, you know, it's up 40% since then. So, you know, that's my sort of, you know, getting on top of your risk management. It should be finely tuned so you don't, you know, micromanage things on bad days, and to capture the best markets. Okay, I'll leave it there.